All right, everybody, here we go. Stocks by the numbers. Welcome back. I just wanted to take a really quick look at a handful of companies that reported earnings today. I know we technically had a long list of them, but I just wanted to look at a few. Amazon, AMZM, in my opinion, AMZN, excuse me, closed 238.83, and we can see after hours the stock dropped all the way down to about the mid 220s and completely flattened out at about 229. And it's funny because I just drew out a bunch of trend lines before I started recording, and you can see that as we were on the up and up, see how I connected the trend line here on the tops going back to April 11th, 24 and early July 2024, cutting across. And you can see that is this line right here. And then it was in this upward channel since the drop down in August. It's been on the up and up in this upward parallel channel. And you can see that the stock right here after hours. And if we zoom in, you can see, look at that, right down below the blue and then the purple, and comes right in and completely flattens out in between them. So just about 228 even, or a couple of cents below, is this purple trend line. So it would technically be breaking down and out of this upward bullish channel if we happen to drop down, obviously, and then close down below that. And if we do happen to pull back, you can see this next trend line here looking like about maybe 200 or the very low 200s. So in my opinion, you might be able to get Amazon on sale, maybe moving inside of the next week or two. It could sell off, a nice 10-15%, but overall it was a good beat if you look at the numbers. $1.86 a share, expecting 148, 25% beat. Revenue comes in, estimates were 187.3 billion. They post 187.8 billion almost, and they beat that by almost half a billion, or only a quarter of a percent. But I said a while back too, when I spoke about the big tech, all the big tech stocks, in my opinion, I believe it was Google and Amazon seemed like they were the closest to kind of their quote unquote fair value. So that's why I always said that those should be the ones that grow more than the others. But we know that for the most part, big tech continues to impress. 2.5 trillion market cap, 50 PE. Obviously, that's going to be down. Stock dropped after hours. But again, watch for that 228 level and see if it drops down. But overall, in my opinion, Amazon pretty decent quarter. AWS, Amazon Web Services, was up pretty big. And you can see even for 2023, you look at the revenue and the profit off of it. I mean, you're talking about 600 billion. And again, that's last year, and we're just talking about revenue. We're not even looking at assets, and that's only about 6x. And this is as of the close, so it's going to be even lower, right? So if they want to drag it down to around like that 5x mark, in my opinion, I think it might be worth it to scoop up some shares. You can see also on the daily, the 50-day moving average, 224.82. So you had 228. Then if it breaks there, you got to keep an eye on this moving average, in my opinion, 224.82. And yeah, mid Bollinger Band on the weekly, 211.87. So that's why you could drop towards the lower end of the 200s and then potentially bounce from there. But again, you can see even on a rough quarter and a big market sell-off here back in August, Amazon chunked down big and then just recovered nicely. So that's why any sell-off here, there's always going to be people out there who are going to buy a brand name like Amazon, and they're going to see that it's down a chunk, and they're going to step in and they're going to buy it on the dip, right? So in my opinion, should be fine. Uh, there were a lot of names, but I know Clean Spark. I just mentioned that I know the last several months Bitcoin had a run up and was climbing and holding around that six-figure mark. So I figured a miner like Clean Spark would probably report some decent numbers, and you can see stock jumped from about the 1040 range and got up to 1121, it says, but continued to slowly channel up. Almost looks like a little bull flag forming, but had a feeling they were going to come out with a nice quarter, and EPS blew it away, 83 cents a share. We're expecting a loss of 6 cents. Revenue comes in about 8 million, roughly 5.25% above estimates, 162.3 million. Estimates 154.25 million. Really good quarter for Clean Spark. Also mentioned Centrus, LEU, low enriched uranium. We spoke about this one back when it was inside of this long-term symmetrical triangle that we eyed. And shout out to the Discord. I know they threw it out there. Stock was over here at like the mid to high 30 range, and we spoke about the breakout. It ended up climbing up to new 52-week highs, well over $100, 118.36. Looked like it was slowly channeling downward. Recently had a run up again, and then you can see we dropped down, tested that moving average. Earnings came out, blew away the estimates. $3.20 a share. Analysts were expecting about $1.25, so they beat that by almost two full dollars, $1.95 roughly. And revenue came in well above the mark. Analysts were expecting 106.6 million. They posted 151.6 million. They beat that mark by 42%, or roughly $45 million. And I know we spoke about uranium, and we spoke about nuclear energy potentially coming up under the Trump administration, that it could be a focus. And we know that Trump's on executive orders. He wants to start drilling again, and there was an energy crisis, or something that he signed. But in my opinion, I think something like LEU is well positioned. And there was another one, I think like UEC or something I might have mentioned in my Trump video. But we know there are a bunch out there. But you understand my point about moving where we see the money flowing, which is probably why you're seeing all the other AI stocks holding their value and continuing to climb up after hearing about, whatever, the 500 billion, I think it was, into AI. So, sometimes just follow the money. It's that simple. Skechers reported earnings. I actually thought they would beat. It looks like it's decently valued in the numbers, but you can see, look at that slight miss on the revenue, 2.21, expecting 2.22, missed by about 1/3%. EPS was solid though, 86 cents a share. Analysts expecting about 75, so that was a nice 15% beat. Looks like it dropped, potential bear flagging, but not a bad quarter. I know they boasted like double-digit gains here. Guided for first quarter. Oh, okay. Guidance was lower as well. Okay, my apologies. 2.4 to 2.43 billion. Analysts were expecting 2.49 billion and a little bit more profitability. Okay. This year expects sales. Really? Wow, they're up to 10 billion. Forecast 9.88 and 489. Okay, so revenue slightly down and expecting a big chunk down in profitability compared to what analysts were originally expecting. But again, we know how this works. Guidance could come out light for the year, and then you give them 1 quarter, 2 quarters, all of a sudden, their margins are up, business is doing better than they expected, and now they're back on track to hit those original marks, right? So could be down in the moment, but if you look in the numbers, I think Skechers is actually decently valued here, 11.4 billion. We got a PE down here at 18, and again, it dropped big after hours. EPS was doing well. Annually on the up and up. If you look even at 2023, you can see 8 billion in revenue, roughly 545 million in net income. And market cap right here at 11.4. So if you do the direct revenue to market cap comparison, it could seem undervalued. Come over here to the assets, the equity, steadily climbing over the quarters up to 4.9 billion. Book value, we're trading less than 3 times book, climbed up to almost $29. But again, the revenue with the profits plus the equity, you're up to about 11-12 billion. And then you come down here. Yes, the debt is outweighing the cash, 2 billion to roughly 1.3 billion. But again, the negative, that would be a rollover of about minus 700 million. And that would come off what? Roughly 12 billion that we looked at, right? So you'd be at about 11.3 billion, quote unquote, fair value for Skechers. And again, right here at this valuation, this was at close, we were talking about a PE down here of 18 1/3. And now again, the stock dropped from 75.60 and closed here after hours at about $66. So in my opinion, it looked decently valued even at 75, which is why I said calls. But again, they happened to come up a little shy, and then the guidance came in a little below what analysts were expecting, so we chunked the stock down a bit. But I actually think it's a decent buy over there at 65 or the 60s, wherever they might take it. Because in my opinion, you could make the argument it's undervalued. BYD Gaming. I know this was Boyd. I know this was casino stock, and you can see estimates for revenue were at $1 billion, and they came in just over $1 billion, 1.04 billion, beating by about 4%. Profitability $1.96. Estimates were about $1.79, so they beat that by about 9.25%. And this one kind of swings and pops and drops in between estimates. I think I first looked at it like all the way back here. I think it was like mid 23. I said, in my opinion, looked decent in the numbers, and you can see we continued up here into the 70s and then completely dropped down into the 50s. Tried to make our way back up to around 70, and then we chunked down here on this quarter. You can see big miss there, 4.5% on the EPS side. They chunked the stock down back into the 50s, even dropped into the very high 40s going into May of 24. And then you can see since then has just been on the up and up, just absolutely ripping, coming out nice beats there. Look at that 6% beat, top and bottom line basically. Revenue coming in, look at that, 40-50 million above the mark for the last back-to-back quarters, the last 2 quarters, and now revenue slightly above $1 billion. So in my opinion, I actually do still like Boyd. And we can see as of the close here, we're talking about $7 billion company, getting a dividend yielding less than 1%, trading less than 15 times earnings. Look at that beta as well, less than 1, which means it's a little less volatile than the market technically on paper. And annually, you can see really nice healthy bounce back, getting back to where they were right away from the lockdowns in 2020, going into 21, and slowly growing up throughout the years. As of last year, $3.75 billion on the revenue, $620 million on net income, right? So that's about $4.3 billion, and you can see we're trading about 1.5 times the annual revenue with the profits on Boyd. And if we just want to check the equity real quick, we can see we're holding a decent amount of debt, which is probably why they can't pump it up straight away. Cash sitting here at $290 million. And then we come over here and we can see equity bouncing around, holding, like that high 1.6 level. Actually 1.7 level, excuse me. Now it's down to 1.6. Book value about 18 1/3. But again, if you want to put like quote unquote fair value, maybe around like 3 billion and change, right now market cap was 7 billion. So that's why we can slowly see something like this just continue to hold and climb up 2.5, kind of 3x quote unquote fair value. And you can slowly start to see it make its way into the 90s potentially, and even hitting that $100 psychological level. I also wanted to look at Elf Beauty. I know this was one that people spoke about. Like over here when it was absolutely raging, stock was over $200, and looks like it just topped out and just started to chunk down and kind of come back down to earth as of late. But technically the earnings have been pretty solid, and you can see that this company continuously hits the mark when it comes to profits and revenue. And now this quarter they missed by 1.8 cents on the EPS side. Revenue though still very solid, coming in about 25 million above this 330 million mark. They come in with 355.3 million, 7.5% above the estimate. And you can see that if you drew out some of these trend lines here, this is going back from the bottom of 2020 there with the lockdowns. And I just kind of came up and intersected through some of these key levels. And you can see that we dropped and ended up touching a lot of these trend lines perfectly. I know I didn't mention these trend lines before, but again, I drew these out, and then it's just something I noticed, and I jumped on and made included them in the video. But you can see that if we stretch that one out, let's see where this goes through. Yeah, see that big red candle right there, and then right at the bodies of all these tight little hammers forming here, and then you can see we spiked back up and gapped, and I went kind of right there. And you can see that if we are to drop, we're looking at about maybe 78.5. And if we come after hours, though, you can see the stock completely cratered and dropped well below that down to 66.20. So we can reevaluate the situation. If we happen to come, like here to here, that would still be too high. So we're like down here right now. So could remain quiet for a while. About 5 billion market cap, 47 PE. Look at that growth in revenue, just beautiful. Little over $1 billion as of last year. we check, debt is up here at 300 million, had about 100 million cash on hand. That's not too bad. Assets outweighing liabilities, both short and the long term. Equity climbing up to over 700 million. And we were what, minus like 200 million with the debt. So we're at about $500 million. And for last year, about 1.1. So maybe like around 1.6, quote unquote, fair value. And we were sitting here at about 5 billion. So understandable maybe that they want to continue to bring it back down. This absolute, it looks like this is the absolute bottom support level here. If they really want to beat it up and bring it down, and you can see that would be, you know, about $20 or something if it takes that long. But I really don't think that's going to happen. That's just my opinion though, because the company is growing nicely. But again, if we come up, yeah, maybe right there looks a little more from the bottom of February 27th, it looks like, 2019, coming up to that bottom right there of about the third week of May 2022. I know it's hard to tell sometimes what's going on, but there you go. That looks like a better trend line. You can see, look at that, it stopped and tried to hold it for 2 ticks in a row, and then a solid green candle, retraced back to the moving average. Look, comes down, tests it, and you can see, look at the next candle. Look, tight little candle right there, trying to close and hold right at that trend line, and then rejected, tested right after, and came down. And look how it completely flattened out, almost similar to what we saw with Amazon, right? Got to that one trend line, tested the other one, and then completely flattened out. So it can possibly continue to drop downward, but I'd say, yeah, really should be like 70. Worst case, you're seeing maybe about 54, in my opinion. But technically, the company is growing nicely. So even if it's viewed as overvalued and you begin to take a position, if it does happen to drop and stay into the 60s, maybe the 50s, make new lows, obviously, you know, in my opinion, you could view that as an opportunity. You can view that as an opportunity. Because again, the business was growing nicely. And I just wanted to talk about Take-Two, which I believe, okay, yeah, I saw that they missed. See, here it's showing 72 cents. I know what that's adjusted, 72 cents a share. Estimates were about 58 cents, so they beat that by about 25%. Revenue came in light, 1.37 billion. Analysts expecting 1.39 billion, so they missed revenue by about 1%, but you can see the stock spiked up from the low 180s to almost 200, and then potentially started to tighten. Looks like a potential bull flag, could see about $200 a share. In my opinion, it's basically because they mentioned that GTA is supposedly due out this fall. And, you know, I've seen this time and time again with a company like Take-Two, because even when we had mixed earnings, you can see the stock shoots up. I think it was around this time where I was calling puts, and the stock just kept climbing off of those earnings that were a little mixed. But in my opinion, I thought puts. I thought it could come back down, but you can see there's a 1-year chart. Next fib level, 201.58. So that might be where the stock wants to go. We ran up here and just tightened into this sideways channel, and now we're kind of sitting here in the 190s, it looks like. So it might want to force its way up. Now it's technically at new highs, right? So that's what I mean. They might force it up to the next fib level and then start to cool it off and calm it down. But in my opinion, kind of an underwhelming quarter, but maybe that's just how I was looking at it. So I thought Take-Two really should be down, but again, you know, you mentioned GTA, and it's off to the races. Let's see, raised outlook, raised its full year earnings outlook. Loss wasn't as bad as analysts expected. Loss of 4.5 to 417 for fiscal 25. Previously guided for 480 to 443. Okay. Analysts expecting 441. That's technically still in their range. Revenue outlook 557 billion to 567 billion for the year. All right, so outlook looks a little better than previously expected. So maybe I'm being a little hard on them, but I don't know. In my opinion, I feel like it's really all about GTA, and just because people know that GTA is looming, people will continue to buy Take-Two shares. But hey, I get it. Yeah, expect GTA in the fall. Video game maker. Take-Two said strong performance by basketball 2K. Okay. Helped to offset moderation experience in several of its mobile franchises. Yeah, I remember it was, yeah, for the last couple of quarters, I know they were mentioning the drop in mobile. Company responsible for Red Dead. Yeah, guidance seems good right now, but again, only time will tell. Okay, Zelnick seems positive. Civ 7 they're up to. Oh, that's due out in a few days. Okay. Shout out to anyone who's waiting for that. New Mafia game. GTA 6 in the fall. We feel great about what's to come with GTA 6, but we never claim success until we earn it, until we deliver it. EA said in January that it expects bookings to fall following weakness in its football division. Disappointing sales of Dragon Age. Take-Two's trying to hold this forecast. I don't know. Maybe they're doing it just because EA said they might have a rough outlook. So that could be part of the game here. Only time will tell, though. You have to see again over the next 1 to 2 quarters if it looks like they're going to keep that guidance. Nintendo Switch 2 is coming to market. Okay. Quote, historically, we've supported Nintendo platforms selectively. We've supported them when the platform is right for the property at hand. We haven't made any announcements, but I think you can expect it will be supportive when it makes sense. Okay. So, obviously, sounds like they're probably going to have their games ported over to the new Switch 2. It is. Shares were up. Alright. So, that is pretty much it. I just wanted to talk about a handful of companies, but I know a lot reported, and we'll get to them down the road if you guys really wanted to look at any one of them specifically, but those were a few that I was personally keeping an eye on and was really more curious to see how those companies reported and what they had to say. And again, some good, some bad, some mixed, but it is what it is. We know going into earnings it's 100% a gamble, so hopefully if anyone played any of these plays, you weren't too exposed, and you'll live to fight another day. But that's it. I'll end it there. Once again, Stocks by the Numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of bucks. Thanks for your time, and have a good day.